of MSATP TV. Joining me this afternoon is Cliff Reiter with Practice Accounting Sales. And Cliff, why don't you introduce yourself and tell us a little bit about Cliff?
Okay. Good afternoon, everybody. I'd like to thank the MSATP for allowing me to be live. I've been in the business of buying and selling accounting practices for the past 25 years. I was with Professional Accounting Sales. Now I'm with National Accounting Sales. I have my own network. And we can handle a deal from start to finish. We can find buyers, negotiate the deals. We have financing. And though I can't practice as a lawyer, I can do contracts. We have boilerplate contracts. I think now that COVID is maybe coming under control, I think it's going to be a very good market both to buy and sell, especially as a lot of you have lost clients, maybe especially business clients due to the pandemic and so on and so forth. We can, as I said before, we can handle the process from start to finish. And I've been through 9/11, the dot-com bubble, COVID, and I think I've seen everything, and I can help people get this transaction done. I want you to know that you don't have to retire completely. I also specialize in helping people sell a line of business, whether it be tax or write-up, sell offices, or just sell clients. And so with that, that's basically what we do.
Okay. If you were going to select what is the perfect person to be a buyer of a business, what would you recommend?
I like buyers who ideally who maybe done this before, who know what they're getting involved in, who understand the risks, maybe are a little entrepreneurial. And though in a fair number of cases, I have people who've, especially with COVID, who got downsized out of jobs in the dot-com bubble. They went to work for a dot-com, and then they were going to make all this money as these firms go public, and then 2 years later, they're back buying practices. But I think it helps to have a little experience doing this, not coming right out of college or grad school, some experience, especially. And also, if you work in large companies, it's a different situation. You're a generalist when you're buying a practitioner's practice that's with the MSATP. A lot of times in the bigger public accounting firms, you're a specialist. You're in audit, you're in tax, you're in management consulting. And a lot of the small business clients expect you to not only do their tax work, but if they got a mortgage issue or they got an employment issue, that's who they're calling, their preparer and their accountant. So I like some experience, and also some of the lenders don't want everybody coming and buying a practice. A lot of times they want somebody who's had a couple of years of work experience before they'll engage giving them a loan.
Okay. Now, you were saying about financing. So if I'm a seller of a practice, I could expect that banks or lenders would be out there looking to do 100% financing. So I would say 100.
I would say 100% is tough. I say a lot of the lenders, you can get them to go up to 90%. There are some situations where they'll let a buyer do 100% if they have an existing practice, but they might want to take that practice as collateral. And ever since the Great Recession, everybody wants to have somebody with skin in the game. The buyer, the seller. They've even been trying to get the broker to have skin in the game. So, so that's the reason why they like that 10%, maybe 15%. And if buyers tell a seller, I want to have, especially now after the pandemic, that maybe you're going to lose some clients, that if there's a little bit of a note out there, they have the ability to claw back something. And that sometimes makes a deal go a little easier, because if somebody has done this before, they've been through this process. And if they've lost clients, or if they've lost too many clients, they're going to be asking for that.
Sure. Now, when you're talking about selling a practice, what kind of a multiplier should one of our members be looking at for selling their practice?
Well, it depends where you are in Maryland, but I would say anywhere from 1 to 1.25 times the gross. Pre-pandemic, I did get to sell a couple things closer to 1.25, 1.3. But for sellers, I might, and I'm a baby boomer myself, I might tell people to accept a little less in price to get more of that in cash, like the 90% or the 85% or 95% down, because what that means is that you have less risk. You might get a slightly lower price, but you might have less risk.
Okay. And typically, what would the terms be? Like a 3 or 5 year buyout?
I would probably say I try to, being a seller's broker, I like 3 years, but sometimes 5 can be done. If there's less that the seller is owed, maybe you're willing to take 5 years because it's less you have to try to collect. But 3 to 5 years is a reasonable number.
Okay. And is there anything in particular that somebody needs to do to get their practice ready to sell it?
Well, yes. One thing, this isn't always easy. A lot of people will, not everybody has a non-competes and non-solicitation agreements with employees. And if you haven't asked for it in 30 years, it's tough to get it. But sometimes I'll mention that. If you have receivables and if you've been too slack with clients, try to collect them. Because if you have a lot of write-up work, and if the receivable is too large, the buyer might say, I'm starting to do a lot of work, but we've got too much to collect back from the client. And also, I see that as guys get a little older, they don't like rocking the boat and they don't always raise their prices. So if your time frame is a year down the road, start to getting those costs of inflation up with people and start raising your prices a little bit. Because sometimes I've seen CPAs and EAs with pricing that's less than Block or Jackson Hewitt because they haven't raised clients in a lot of years.
Mm-hmm. So, is there anything that's, I'm going to say, typical on somebody who's looking at selling their practice? Is there anything that's typical in what you see going from one firm to the next? As far as like hourly rates or things like that?
I think that's for a smaller practitioner, and you have all firms of you have large firms, small firms, but if you've got a $2, $3, $4, $5 million firm, 4, 5, 6 partners buying out a sole practitioner, you have to look at what the rates are, because if the big firm is at $400, $500 an hour, and let's say you're at 200, that's not always a good match, because when you get in the busy season, they're going to put your clients on the side and take care of their $500 an hour clients. So that's always an issue. Another thing to look at is making matches when if they're using CCH and you're using Drake, transferring over, that might be indicative of somebody with a different kind of a fee structure. Also, office leases. Not everybody wants office leases. And, the pandemic has changed a little of that because, not everybody is seeing everybody anymore because of the pandemic. They're dropping off or they're going to the cloud. So I like to match up, software, office space. Some people might try to, if somebody is going to take your office, that might be a better transition. If somebody is going to move the practice, not everybody, prior to the COVID, that was a much more important criteria.
Okay. So,
and also one other thing is if you have staff and somebody's worked for you for 10, 15, 20 years and not ready to retire. You know, not all buyers want staff, but yeah, as we know, it's not easy getting good staff.
Right.
And so that's also a discussion point.
Okay. So having staff is a positive or a negative?
I would think now it is. And it varies firm to firm, but I have bigger firms. I have a deal I was working on in Pennsylvania, where part of there's a bigger firm acquiring a smaller firm, and the bigger firm said, "I'm looking for a firm with staff." So
Okay.
so some of the acquisitions might not be purely quantitative. There could be some qualitative reasons for doing this, and staff could be one.
Okay. Having non-compete agreements with your staff, you said was important. Is it also?
Well, it's a plus, but it's difficult. If I had somebody who's worked for me, and it's a fine line, and this is, I got to protect confidentiality. Not everybody tells their staff.
Right.
You know what I mean? So,
yep.
And so if everybody knows what's going on, it's not as important. But if they're going to know 2 days before closing that the practice has been sold, that becomes a little bit could be a little bit more of a consideration.
Okay. So whether you're interested in buying or selling your practice, give Cliff Reiter a call. Why don't you tell us how to get in touch with you, Cliff?
Well, the number is, I have two numbers. The office is the main office is 914-722-1029. The email is cliff@nationalaccountingsales.com. And if you want to call me on my cell phone, it's 914-325-4419.
And you're interested in both buyers and sellers.
You need both to tango. And
right.
So, yes, I need buyers, sellers. I also do mergers, which is, and if people, and they're part of the society and they found their buyer for people within the MSATP, I will do consulting for people who find their buyer and try to negotiate a deal.
Okay.
And I could do that as a consultant rather than on a contingency basis.
Okay. That's great. So if tax season was just too much for you and all the PPP and all the tax laws that they just recently passed, and you're considering selling your practice, Cliff's a good guy to give a call to. He will get your practice sold for you. And so when you're thinking about that, or if you're interested in buying a practice and expanding, trying to make as much money as you can out of all the ability and opportunity that's out there, give Cliff a call. He gave you the phone number. So look out for him, and he'll be at some of our seminars coming up in the near future. So we look forward to seeing you, Cliff.
Thank you. Will do. Thank you, Bill. Appreciate all the time. Thank you.
Bye.
Bye.